So if you think about what the big bet is right now, and the reason the stock market keeps going higher, it's driven by the Magnificent Seven, or these tech stocks. There's
a little bit more broadly now in the last couple of months.
Yeah, that's right. Fair.
But the big run up has been because of this Magnificent Seven.
Well, if you take that away, I think the estimate is the economy grew by 0.1% last quarter, something along those lines. So the bet is that this is eventually going to have a massive improvement on efficiency, right?
Yes.
And productivity.
That's correct.
But right now, to your point, it seems quite insular in the fact that Microsoft's doing a deal with
Amazon Web Services.
They're all doing deals with one another and spending with one another.
Circular, like I invest in you and you buy this software. And I was talking to a software salesman and he said that's pretty common. He said this guy was in software sales for over 40 years and selling big enterprise systems. So he said it wasn't uncommon to go to Microsoft and say, okay, we're going to sell you this payroll HR software, and in return, we're going to use this. And he said the problem is he said that you actually had to audit it, that the software itself was actually being used. Because if you weren't using the software, it looked like a form of rebating. Like, I'm just going to buy this software from you, and it's going to push your sales. It's going to push our sales. But if I don't use that software and I just shelf it, then it's a form of manipulation of your earnings.
So let me get this straight. So you have to make sure we're actually using the software we bought that we didn't want. We bought it to get this deal done.
That's right.
But we have to use it.
That's right. I thought it was interesting. But Scott, I watched this fabulous documentary this last week on public PBS. And it was about rails to trails, right? Taking old railroad tracks and turning them into bike trails. And you're thinking, well, what's this got to do with this? At the beginning of the railroad boom, there were so many railroad companies that laid railroads just to where they thought there was going to be a marketplace, and it never materialized. Just never. And the railroad just sat dormant.
So we had excess rail even when we maximized our rail transportation.
That's right. And because so many companies were buying putting in little rail lines, right? So how many phone calls do you get a week from someone trying to sell us AI? I probably get 5 or 6 and then at least 24 emails. And I always think, this is a little bodunk company trying to sell AI. So they're building all this infrastructure for AI, and not all of it's going to make it. And even the ideas of the best AI infrastructure isn't going to improve the business processes if they're not used effectively. So it brought me back to every other cycle, right, where you go through these transformational periods of time where there's overcapacity.
Clearly we're in.
Yeah, overcapacity.
There may be overcapacity.
Yes.
And there may be new technology that can process this with 10% of the power.
I wouldn't. That's when you look at Nvidia's stock and you think, there's companies out.
$5 trillion that hit the week or so ago.
That's right. But there's competitors out there that will displace them in a relatively short period of time.
Or at least at some point in time.
I'm guessing relatively short period of time, less than 2 to 3 years.
It's interesting, Pat. You look at those Magnificent Seven stocks, and we don't always talk that much about stocks, individual companies, but it's just an interesting time. They make up something like 38% of the market cap of the S&P 500.
That's right.
So you put $1,000 into an S&P 500 index fund, let's say, 380 of that $1,000 is invested in just those 7 companies.
I have clients calling, do we own any Nvidia? Yes, we own quite a bit of Nvidia.
Right. Even if you just own index stocks, yes, you're number one holding.
That's right. Just because of the weighted cap.
Yeah, it's amazing. And there will be, everyone has an iPhone. Matter of fact, if you still live today without an iPhone.
I don't know how you get by. How do you order in a restaurant? How do you take pictures of yourself?
Well, you have phones, but the other phones, like they don't do you can't do the group text. Matter of fact, the other day I went to send a text to a guy who's got an Android phone, and it failed to send. I had to go send it as a regular text. Like iPhones making it think probably more. But
did you drop him as a friend?
I didn't like him anyway. It was just
that was it.
But like, what what if the future of AI changes things such that this phone we don't need the phone the way we need a phone today?
Yes.
The Magnificent Seven, 50 years from now,
They won't be the Magnificent Seven.
there'll
forever.
be 7 other companies that'll be market leaders.
That's right.
50 years from now. And if you go back, you look at the last 50 years, which I think is a reminder for people. Like, do we own any Nvidia?
Yes.
Right? The question, do we own Nvidia? And why are they asking that question? Because Nvidia's done so well. And they want to sell it?
Oh, they wanted to make sure we had, or
Yeah.
they actually wanted to buy some if we didn't own it.
Right.
We own a lot of it.
Right. But they didn't want to sell it.
No, they absolutely not. That's right. Your point being.
My point is, the financial markets are fascinating. The fact that when something goes up in value, that's when people want to buy more of it. Whether it's gold, Nvidia,
Bitcoin, or the thousands of other digital currencies out there.
Yeah. Anyway, it's a really fascinating time.
Yes.
And the benefit of being in the industry for a few decades is you've seen some of these cycles. They all are different.
They're never identical, but you don't get too excited about any of it.
That's fair.
He's just like, this is it.
That's fair.
It's part of the game.
It's funny. I was reading just a few days ago. I forget the name. It was a famous investor. I didn't know the article said he was a well-known investor. I never heard of the guy. Anyway, it was back in the 90s, and how he shorted the market in 1999 because he knew it was too high, lost his shirt, covered his positions, went long. It just turned out he shorted the market on the exact. I'm sorry, he went long on the market on the exact day the NASDAQ hit a peak in March of 2000.
And he went long. He bought in.
He bought in, lost billions. And he capitulated like this. I guess I'm wrong. I guess the story's going to continue to play out.
I can't. Yeah.
And he was wrong both times. Yeah, wrong both times. And supposedly he was a
famous investor.
He's infamous now.
That's right.